Subscribe to LearnCab and hit the bell icon to get notified.
The next amendment is with regard to validity of e-waybill. Friends, as regards as the validity of e-waybill is concerned, it is based on the mode of conveyance and the mode of transportation. Friends, if the transportation of goods is through an over-dimensional cargo, or it is through a multimodal shipment where at least one leg involves transportation by ship, the validity is up to 20 kilometers, 1 day from relevant date. For every 20 kilometers or part thereof, it is 1 additional day. However, for other than over-dimensional cargo or a multimodal shipment where no leg involves transportation by ship, in those cases, the validity of an e-waybill used to be up to 100 kilometers. It used to be up to 100 kilometers. The validity is 1 day from relevant date. For every 100 kilometers or part thereof, it used to be 1 additional day. Now friends, an amendment is in this area. For other than your over-dimensional cargo or a multimodal shipment where no leg involves transportation by ship, there is a change. This up to 100 kilometers is changed to up to 200 kilometers. So friends, now the revised validity stands as up to 200 kilometers, 1 day from relevant date. For every 200 kilometers or part thereof, it is 1 additional day. The next amendment, Rule 138E, restriction on furnishing of information in Part A of EWB 01. Friends, in this case, Clause D, we have already seen when we were seeing suspension of registration. A person whose registration has been suspended either under 21A, Subrule 1, Subrule 2 or Subrule 2A, which means either the registered person has made an application for cancellation of registration or the proper officer has suo moto initiated cancellation of registration. In either of the cases where the registration has been suspended against this person, against this registered person, the restriction which is being placed is this registered person would not be in a position to generate an e-waybill. Also, any information in Part A of EWB 01 in respect of this particular registered person cannot be furnished and information and e-waybill cannot be generated. This change we have already seen. Another change is over here. Earlier, prior to amendment, the provision used to be the registered person being a person other than a person who is specified in Clause A. The person who is specified in Clause A is a composition taxable person. So, other than a composition taxable person means a person who is paying taxes under Section 9. So, registered person being a person who is paying taxes under Section 9 has not furnished the returns for a consecutive period of 2 months. Earlier it used to be 2 months. Friends, now this 2 months has been replaced by 2 tax periods. Now this 2 months has been replaced by 2 tax periods. Friends, the reason for this replacement is the introduction of QRMP scheme. Friends, those persons who are opted to pay taxes under the QRMP scheme, for them the tax period is quarter. For them, 1 quarter is a tax period. Friends, those persons who are paying taxes under the monthly return, monthly payment. That means the tax payment is also monthly, return is also monthly. So friends, for monthly filers, the tax period is month. For monthly filers, the tax period is a month. Prior to introduction of QRMP scheme, everybody were monthly filers. GSTR 3B had to be filed on a monthly basis. So now friends, after the introduction of QRMP, now the tax period is both monthly as well as quarterly. So this 2 months has to be replaced by 2 tax periods. So now friends, the provision tells if a registered person who is under the QRMP scheme has not filed returns for 2 consecutive quarters, e-waybill cannot be generated. Also, a person who is not paying taxes under the QRMP scheme, who is filing the returns on a monthly basis, if he has not filed returns for 2 consecutive months, e-waybill cannot be generated. So friends, 2 tax periods includes both 2 months also and 2 quarters also. It is 2 months for monthly filers, 2 quarters for QRMP fellows. Next amendment under Section 51. Now friends, wherever the value of taxable supply of goods or services exceeds 2.5 lakhs under a contract, and if this supply is made to a notified recipient, the notified recipient is supposed to deduct TDS. He is supposed to deduct TDS at 2% and deposit the same with the government. After depositing it to the government, he needs to file a return in the form GSTR 7. He also needs to give a certificate. the deductor also needs to give a TDS certificate in form GSTR 7A to the deductee. Now friends, if there was any delay in giving the certificate to the deductee, there was a late fee which was imposed on the deductor. Also, if there was any delay in filing GSTR 7, there was a separate late fee. So friends, there were two late fees which were imposed on the deductor. If he fails to file GSTR 7 within time, there was a late fee which was being imposed. If he fails to give GSTR 7A, the TDS certificate to the deductee, there was a separate late fee which was being imposed. Let's have a look at the provisions. Section 51 subsection 3. The deductor shall furnish to the deductee a certificate mentioning therein the contract value, the rate of deduction, the amount deducted, amount paid to the government, and such other particulars in such manner as may be prescribed. Subsection 4. So it basically says the deductor needs to give a TDS certificate to the deductee. Subsection 4. If any deductor fails to furnish to the deductee the certificate within 5 days of crediting the amount so deducted to the government, a late fee, a sum of rupees 100 per day, subject to a maximum of rupees 5,000 was to be levied. Now friends, the issue was when everything is happening through the portal. When everything is happening through the portal, you file returns through the portal, then why not certificate itself can be given through the portal? Why not? The portal itself takes the responsibility of giving the TDS certificate to the deductee. Why cast a separate obligation on the deductor to provide a certificate to the deductee? And in case if the certificate is not given, levy a separate late fee for it. Friends, when GSTR 7 is being filed, when the taxes are being paid, when the details of the deductee is being provided, the value is provided, when everything is being provided while filing GSTR 7, why not the portal itself gives the TDS certificate to the deductee? When everything is spoken in automation terms, why not this also be automated? So friends, with regard to this, there is an amendment. Now, the deductor need not give a TDS certificate to the deductee. The portal would automatically give the TDS certificate to the deductee. And also, consequently, there is no late fee. Since why there is no late fee for delay in giving TDS certificate? Because now it is not the responsibility of the deductor to give the TDS certificate. Since it is not the responsibility of the deductor to give the TDS certificate, obviously there cannot be any late fees. So we have subsection 3 and subsection 4 which gets amended. So subsection 3, it now states that a certificate of TDS shall be issued in such form and in such manner as may be prescribed. So friends, here there is no obligation on the deductor to make the certificate available to the deductee. If you look into here earlier in subsection 3, the deductor shall furnish to the deductee a certificate. Now these wordings are missing. It simply tells a certificate of TDS shall be issued. Who will issue? No responsibility on the deductor. The portal would take care. In such form and in such manner as may be prescribed. And friends, subsection 4 which spoke about late fee has been omitted. The reason why it is omitted because now the deductor is not responsible to give the TDS certificate to the deductee. So friends, now it is going to be something like this. You have a supplier, there is a recipient who is notified. If the supply of taxable goods or services exceeds 2.5 lakhs, of course, when you are going to compute 2.5 lakhs, you need to check excluding GST. Under a contract, the notified recipient is going to deduct TDS at 2% at the time of making payment to the deductee, to the supplier. Now, after he deducts TDS, he needs to deposit it to the government. The due date for depositing it is 10th of the subsequent month. He also needs to file GSTR 7. If there is a delay in filing GSTR 7, there a late fee of rupees 100 per day subject to a maximum of rupees 5,000 would be levied. This is under CGST. Parallel, you have the same late fee under SGST as well. Now friends, after this GSTR 7 has been furnished, this portal would make available a certificate in form GSTR 7A to the supplier, which is the deductee. To the deductee, a certificate in form GSTR 7A would be made available. Now friends, when this supplier is going to validate these details, the amount which is deducted by the deductor and paid to the government would appear in the electronic cash ledger of the supplier. So friends, the crux is furnishing TDS certificate in form GSTR 7A Earlier, it was the responsibility of the deductor. Now, the portal would make it available automatically. Consequently, earlier there was late fees. Now, there is no late fees for delay in giving the TDS certificate. However, late fee for filing GSTR 7 in a linear manner still continues. Next amendment is in 89 sub rule 4. Friends, the formula under 89 sub rule 4 to claim a refund amount for zero rated supplies which is made under bond or LUT. Refund amount is equal to net input tax credit multiplied by turnover of zero rated supply of goods plus turnover of zero rated supply of services divided by adjusted total turnover. Now friends, currently we are concerned about turnover of zero rated supply of goods. They have defined what is turnover of zero rated supply of goods. There is no change over here. We are just revising this. Turnover of zero rated supply of goods is zero rated supply of goods which is made during the relevant period without payment of tax under bond or LUT, or 1.5 times the value of like goods domestically supplied by the same or similarly placed supplier, whichever is less. Of course, other than the turnover in respect of which refund is claimed under 89 4A or 4B. So friends, this turnover of zero rated supply of goods has got a special definition. It has got a special definition. The government wants to restrict the turnover of zero rated supply of goods to 1.5 times the value of like goods if domestically supplied. Now friends, the question is not this. The question is with regard to adjusted total turnover. Now friends, please tell me whether adjusted total turnover will also include turnover of zero rated supply of goods which is made under bond or LUT. The answer is obviously yes. This adjusted total turnover is nothing but your total turnover. From total turnover, you are going to make some adjustments. So therefore, it is called as adjusted total turnover. It will obviously include turnover of zero rated supply of goods which is made under bond or LUT. Now friends, as regards this turnover of zero rated supply of goods which is made under bond or LUT is concerned, you have got two values. One is actual value. Second one is the notional value, wherein the actual value is restricted to 1.5 times the value of like goods if domestically supplied. In the numerator, you are going to take the lower of the two. Either actual value or 1.5 times the domestic value, you are going to take the lower of the two in the numerator. The question is, in the denominator, should you take the same value what you have taken in the numerator, or should you take the actual value? I repeat, the question is in the denominator. Since denominator adjusted total turnover would also include this turnover of zero rated supply of goods would be a component of adjusted total turnover. Now friends, in the denominator in adjusted total turnover, when you are going to include the turnover of zero rated supply of goods which is made under bond or LUT, what value should be considered inside the adjusted total turnover? Is it the actual value, or is it that value which is 1.5 times the value of domestic supplies which is considered in the numerator? Let's take an example. We'll be in a better position to understand why this question is being raised. Friends, net input tax credit is 18,000. Net input tax credit, case 1, 18,000. Export of goods is 2 lakhs. Export of goods is 2 lakhs. Value of above goods if sold domestically, it is 1 lakh. Value of above goods, if this very same goods are sold domestically, it would be sold at 1 lakh. 1.5 times of the value of domestic supply, 1.5 lakhs. You have some other interstate supplies, your domestic supplies, 3 lakhs. What is the maximum eligible refund? Friends, maximum eligible refund is net input tax credit, which is 18,000, multiplied by turnover of zero rated supply of goods plus turnover of zero rated supply of services. In this question, there is no turnover of zero rated supply of services. I take turnover of zero rated supply of goods, which is how much? Either actual value or 1.5 times the domestic value. Whichever is lower. Actual value is 2 lakhs. 1.5 times of the domestic value, which means if the very same goods are sold domestically, what would be the value? It is 1 lakh. 1.5 times of that is 1.5 lakhs. So 2 lakhs or 1.5 lakhs, whichever is lower, I would be considering it to be 1.5 lakhs. So friends, net input tax credit 18,000, turnover of zero rated supply of goods 1,50,000. 18,000 multiplied by 1,50,000 divided by adjusted total turnover. Now friends, adjusted total turnover means what? The total turnover after some adjustments. Now friends, we are ignoring those adjustments because it is not a part of our amendment discussion. Now friends, what is the total turnover? 1, you have export of goods. 2, you have interstate supply. Interstate supply 3 lakhs. Now export of goods. Export of goods actual value is 2 lakhs. Notional value which is considered for the numerator is 1.5 lakhs. Now the question is, in adjusted total turnover, should I take 2 lakhs or should I take 1,50,000? Case 1, assuming I am taking it at actuals, which means I take 2 lakhs plus 3 lakhs. So my adjusted total turnover would be 5 lakhs. So now friends, 18,000 multiplied by 1,50,000 divided by 5 lakhs, the amount of refund which I am eligible for is 5,400. Option number 2. Things remains the same. ITC is 18,000, export of goods is 2 lakhs. Value of the above goods if sold domestically, same 1 lakh. 1.5 times of the value of domestic supplies, same 1,50,000. Interstate supplies, some other local supplies, 3 lakhs. Now friends, what is the maximum eligible refund? Net income tax credit 18,000 multiplied by turnover of zero rated supply of goods 1,50,000 divided by adjusted total turnover. Now friends, adjusted total turnover contains what? It contains export of goods and it also contains some other intra-state supplies, some local supplies at 3 lakhs. 3 lakhs obviously I am going to consider. Now as regards its export of goods is concerned, should I consider 2 lakhs or should I consider 1,50,000? Because what was considered in the numerator is 1,50,000. What is actual value is 2 lakhs. In adjusted total turnover, what should I consider? Now friends, in case 2, in case 1 we have considered it at actuals. In case 2, let us consider it as notional. So I would consider 1,50,000 and I would consider the interstate supplies. So my adjusted total turnover becomes 4,50,000. So friends, the maximum amount of refund which I am eligible for, 18,000 multiplied by 1,50,000 divided by 4,50,000, I get 6,000 as the answer. So friends, in case 1, where I have considered the export figures as actuals in my adjusted total turnover, I get 5,400. In case 2, when I have considered my export turnover as the same turnover which I have considered for the numerator, which means I have taken the notional value, I get it as 6,000. The question is, in the adjusted total turnover, what figure should I consider when I am going to consider the turnover of zero rated supply of goods? Friends, let us analyze the definition of adjusted total turnover. The definition of adjusted total turnover, it tells me I would first take the turnover in a state or union territory. From there, I would exclude the turnover of services. Now, having excluded the turnover of services, the entire turnover of services is being excluded. So what is turnover of services being excluded? I have excluded zero rated supply of services also and non-zero rated supply of services also. Now friends, this excluding the turnover of services, this turnover is as per my books of accounts. It is as per my books of accounts. So friends, from the total turnover inside the state or union territory, I have excluded the turnover of services. The turnover of services which is there in my books of accounts. Now, this turnover of services I will be further bifurcating it into 2. 1, zero rated supply of services. 2, non-zero rated supply of services. As far as zero rated supply of services is concerned, I have excluded that also. I have excluded non-zero rated supply of services also. I am going to add them back. But what is the difference? When I am going to add them back, why have I removed them? Friends, please concentrate. Adjusted total turnover. From this, what is adjusted total turnover? I take turnover in a state or union territory as base. From there, I remove the turnover of services. What is meant by turnover of services? I am removing turnover of zero rated supply of services, turnover of non-zero rated supply of services. Again, I am going to add them back. But friends, when I am going to add the turnover of zero rated supply of services back, I am not going to add what I have excluded, what I have removed. What I have removed is according to my books of accounts. What I am going to add back is according to the definition which is being given for this formula, turnover of zero rated supply of services. And this formula says billed plus amount received. Billed plus amount received will constitute my turnover of zero rated supply of services. Friends, please understand, in my books of accounts, merely billed but amount is not received would also form a part of my turnover of zero rated supply of services according to my books of accounts. Therefore, I am removing it and adding it back. What am I adding it back? I am adding it back what was taken in the formula. Turnover of zero rated supply of services according to the formula, I am adding it back. And friends, what remains to be added back? Turnover of non-zero rated supply of services. Whatever I have removed, I add it back as it is. So it says, and non-zero rated supply of services. Now, the next one, I would also include the value of exempt supplies other than zero rated supplies. I would also include the turnover in respect of which refund is claimed under 89(4)(a), 4(b) or both. So friends, the broad structure is turnover in a state. It could be of goods, it could be of services. Goods could be zero rated supply, non-zero rated supply. Services could be zero rated supply, non-zero rated supply. Now friends, what am I doing? This turnover in a state, I am removing the turnover of services, because here it asked me to exclude the turnover of services. I removed the turnover of services. Turnover of services contained zero rated supply also, non-zero rated supply also. Now I add the zero rated supply of services again, but what am I adding is according to clause D. So this refund amount is A, net ITC is B, turnover of zero rated supply of goods C, and turnover of zero rated supply of services D. I am adding according to D. Non-zero rated supply, add it as it is. I remove the value of exempt supply. I remove the turnover where refund is claimed under 89(4)(a) and 4(b). Now friends, if you look into the structure of the definition of adjusted total turnover, please understand, is there a notional figure in the numerator? Now please follow very carefully. Is there a notional figure in the numerator? What do we mean by notional? Which is different from actuals, which is there in books of accounts. Friends, this turnover of zero rated supply of services which is there, it is not according to your books of accounts. It has got a special definition, billed and amount received. So friends, now in the numerator you have a notional figure. In the numerator you do have a notional figure which will not tally with your books of accounts, because here it would be what is billed and received, only that will come. Your books of accounts may contain purely billed as well. Also, in this case, you might have received the advance earlier. Now it would be billed. That also would be considered. In simple terms, turnover of zero rated supply of services would consider billed plus received, which may be different from your books of accounts. But here in the numerator, what have you considered? We'll name it as notional. We'll name it as notional because it may not match with your books of accounts. Here what am I going to consider is billed plus received. Now friends, in the numerator, the value which I have considered, am I considering the same value in the adjusted total turnover? The answer is yes. Because the definition of adjusted total turnover is specifically asking me to do so. It is asking me to exclude the turnover of services and add back the turnover of zero rated supply of services, which is according to D. But friends, it is not asking me to do the same thing as regards as turnover of zero rated supply of goods is concerned. There is no mention about it. Had the adjusted total turnover told me, remove the turnover from the turnover in a state, remove the turnover of zero rated supply of goods and add back what was considered in class C, which means whatever you have considered in the numerator, the same figure you also consider for the denominator, so that both the numerator and the denominator are in alignment. Adjusted total turnover doesn't speak anything about turnover of zero rated supply of goods, unlike how it is speaking about turnover of zero rated supply of services. So friends, one view tells that, there could be one view which states that since it is specifically talking about services without talking anything about goods, in the adjusted total turnover, I would take my export value at actuals, irrespective of whatever I might have taken in the numerator. Actual export value 2 lakhs, if supplied domestically 1 lakh, 1.5 times of that 1,50,000, considered in numerator 1,50,000, never mind. This formula is not asking me to remove the actuals and replace it with notionals. Since the formula is not asking, in the denominator I would consider actuals only. This is one side of the argument. The second side of the argument is, it says, what is adjusted total turnover? All these components would form a part of adjusted total turnover. This turnover of zero rated supply of goods obviously is a component of your adjusted total turnover. So when in the numerator, whatever value which you are adopting for the turnover of zero rated supply of goods, the same value you will have to adopt in the denominator, because this turnover of zero rated supply of goods is obviously a component of the denominator only. Adjusted total turnover includes turnover of zero rated supply of goods. So whatever is the value which you have considered in the numerator, the same value you will have to consider in the denominator as well. This is another side of the argument. So friends, there is a circular 147/03/2021 which states that whatever is the value which is considered in the numerator, the same value needs to be considered in the denominator, even though the definition of adjusted total turnover is silent about turnover of zero rated supply of goods. What value you need to consider? The circular says you will have to consider the same value what you have taken in the numerator, because adjusted total turnover would include turnover of zero rated supply of goods. Since in the same formula, for turnover of zero rated supply of goods, whatever is the value which you have considered, you will have to consider the same value in adjusted total turnover to maintain the alignment. So friends, there is a circular which is being issued, and friends, is the circular beneficial to the assessee? The answer is yes, because we have seen in this case, when you are going to consider the notional figures, whatever is the figure which you have considered in the numerator, if you are considering the same figure in the denominator also, you are in a better off position. Look at the example number 2, friends. In example number 2, what is my adjusted total turnover? Here, what have I considered for numerator? 1,50,000. So in the denominator also, as regards as zero rated supply is concerned, I would consider 150, and the second element would be 3 lakh. So totaling it would be 4,50,000. So 18,000 net ITC multiplied by 1,50,000, it is the turnover of zero rated supply of goods, divided by 4,50,000 would give me a refund of 6,000. It gives me a refund of 6,000, which I am in a better off position. Had I considered in my adjusted total turnover, had I taken the value of zero rated supply of goods at actuals, I would have received only 5,400. So friends, the circular is beneficial to the assessee. The assessee can obviously follow it. So now the position is, as regards as adjusted total turnover is concerned, you need to take the same value, the value which you have taken in the numerator, both for turnover of zero rated supply of goods as well as turnover of zero rated supply of services. Whatever is the value you have considered in the numerator, the same value we are going to consider in the denominator, because adjusted total turnover would include turnover of zero rated supply of goods, also include turnover of zero rated supply of services. Whatever is the value which you have taken in the numerator, the same value you need to take in the denominator. The next amendment in the chapter of offences and penalties. Friends, against a defaulter, tax proceedings can be initiated, penalty proceedings can be initiated, also criminal proceedings can be initiated. The person could be jailed. Now friends, let's talk about penal proceedings. Section 122 subsection 1 lists out various activities and penalty against them if it is being carried out by a taxable person. 122 subsection 2, various penalties for a registered person. 122 subsection 3, penalty for any person. Now friends, we are concerned about 122 subsection 1. 122 subsection 1, more we are concerned about a person who is issuing invoice or bill of supply without actual supply of goods or services. He is not really supplying goods or services, all that he is supplying is only document. So in this case, there is a penalty. We are not concerned about the penalty amount currently. So just keep this in mind. The taxable person who is issuing invoice or bill of supply without actual supply of goods or services will have to pay some penalty. Now friends, let's have a look at this paper cutting. Jharkhand man who is chased for rupees 3.5 crores GST fraud turns out to be a daily wage worker. Friends, in this case, there is a GST fraud of 3.5 crores which was found out. In this case, merely invoices were issued without actually supplying goods or services, and the recipient was taking input tax credit. Now friend, the company which issued these invoices, the MD of this company was caught. He was from Jharkhand. Let's have a look at this paper cutting further. Mr. Ladun, who was MD of the company who issued these fake invoices. Ladun clarified that he had no clue how was he made the MD of a company when his Manrega enlisting earned him no more than rupees 198 a day, making it an everyday struggle to make both the ends meet. Let's read further. This is a statement of Mr. Ladun. My nephew had taken my cooperative bank passbook, PAN and Aadhaar cards in 2018 on the pretext that after submission of these, I will receive rupees 2000 per month from the government in my bank account. The nephew further handed over the documents to his son-in-law, who further handed over the documents to one Mr. Sushant Kumar, who is living in Jamshedpur. I have no idea what happened thereafter, and no money came to my bank account either. The 2000 rupees which was promised also did not come. My statements were also recorded in Jamshedpur GST court, where I was asked 7 questions about the company. I had denied forming any company or any knowledge of any such transactions. I am a poor daily wage worker. Where would I get so much money? I can't even dream of any such company. Please forgive me, Sarkar. My wife died last year and I am struggling to survive with my son. So friends, now what is the impression which we are getting from this? The impression is the mastermind is someone else. The mastermind is someone else and somebody else is being made as a scapegoat. The registration is taken in the name of somebody else who is the scapegoat, and the mastermind is planning all these activities and he is retaining the benefit of the transaction. Now friends, please tell me, can penalty proceedings be initiated against this mastermind? Can the penalty proceedings be initiated against the mastermind? Friends, 122 subsection 1, which speaks about invoicing is being issued without actual supply of goods or services, the fake invoices. Here, who is liable to pay penalty? It is the taxable person who is liable to pay penalty. Is this mastermind the taxable person? The answer is no. In this case, the taxable person in the company of whom Mr. Ladun was the MD. Ultimately, the MD is going to be held responsible. So friends, in this case, the scapegoat gets caught and the mastermind escapes. So friends, don't you think it requires for an amendment wherein even the mastermind could be fixed? The answer is yes. So we have 122 subsection 1A. We have 122 subsection 1A. Let's have a look. A person who retains the benefit of a transaction which is covered under 1279 of 122 subsection 1 and at whose instance such transaction is conducted shall be liable to a penalty of an amount equivalent to the tax evaded or input tax credit availed or passed on. So friends, what it is trying to tell? It is trying to tell the person at whose instance such transaction is carried out and who is going to retain the benefit of this transaction, he also will be liable to this penalty proceedings. But friends, does it cover all the transactions? Friends, if you look into 122 subsection 1, there are 21 transactions which are listed. But friends, here 122 1A fixes the mastermind only in 4 scenarios. It fixes the mastermind only in 4 scenarios. In rest of the scenarios, the mastermind cannot be fixed. Friends, what are those 4 scenarios? All are case of input tax credit frauds. Since there are a lot of input tax credit frauds which are happening, so therefore 122 1A is introduced covering this input tax credit and fake invoicing racket. So where a taxable person who, we are now seeing what are these 4 clauses. A taxable person who is supplying any goods or services or both without issuance of an invoice, or is issuing an incorrect or a false invoice. A taxable person is issuing an invoice or bill without supply of goods or services or both in violation of the provisions. If the person is taking or utilizing the input tax credit without actual receipt of goods or services. The last one, if the taxable person is taking or is distributing input tax credit in contravention of section 20. So friends, basically it is speaking about 4 things. 1. Goods or services are supplied without invoice. 2. Invoice is supplied without actual supply of goods or services. 3. Based on the fake invoice, input tax credit is taken. 4. Availment or distribution of input tax credit in contravention of the provisions of law. In these four scenarios, the mastermind who has planned these activities and who is going to retain the benefit, both are important. These transactions should happen at the instance of such person, and that such person should retain the benefit, the profits which is arising out of this framing. This design of transaction should be retained by that particular person. Only then that mastermind could be fixed. Here the penalty proceedings could be initiated against the person. Now friends, having understood this, what about criminal proceedings? As we all understand, against a defaulter, you have tax proceedings, you have penalty proceedings, you also have criminal proceedings which can be initiated against this person. Now friends, there are 12 offences under section 132. 12 offences are there under section 132, and based on the quantum or based on the volume of the offence, there is some imprisonment which is mentioned. Of course, it is also mentioned whether it is cognizable and non-bailable, or it is non-cognizable and bailable. The question is, friends, whether the mastermind, as he was fixed in section 122 subsection 1a for 4 transactions, can criminal proceedings also be initiated against the mastermind? Friends, when penalty proceedings could be initiated, of course, criminal proceedings also should be initiated. So therefore, you have an amendment in section 132. Section 132 subsection 1, which earlier read as follows: whoever commits any of the following offences. Prior to amendment, criminal proceedings could have been initiated only against Mr. Ladul. Criminal proceedings could have been initiated only against the scapegoat, only against that person in whose name these activities are being carried out. The real mastermind was out of picture of section 132. Section 132 has been amended. Now it reads: whoever commits or causes to commit and retain the benefit arising out of it, any of the following offences, namely, against them criminal proceedings can be initiated. So friends, can penalty proceedings be initiated against the mastermind? Yes. Can criminal proceedings, arrest and prosecution, be initiated against the mastermind? Yes. But there is a slight difference. Friends, as regards as penalty proceedings is concerned, it can be initiated against the mastermind only against specified offences. 4 offences are specified. But however, as regards as criminal proceedings are concerned, against all these 12 offences, if the mastermind has designed any of these 12 offences and is retaining the benefit of these transactions, in those cases also against the mastermind criminal proceedings can be initiated, because the wordings are whoever commits or causes to commit and retain the benefits out of any of the following offences. So friends, the mastermind could be fixed in all of these 12 offences. Friends, please understand, as regards as penalty was concerned, only against 4. What were those 4? Supplying goods without invoice, supplying goods or services without invoice, supplying invoice without actual supply of goods or services, taking input tax credit based on fake invoices, and taking or distributing credit in contravention of the provisions of law. Only for these 4 offences the mastermind could have fixed. But friends, for any other offences out of those 21 offences, let's say there's a person who's storing goods which he believes are liable to confiscation. This is an offence under section 122 subsection 1. Let's say a mastermind is causing a person to store the goods which are liable to confiscation. Can the mastermind be fixed under 122 subsection 1a? The answer is no. Under 122 subsection 1a, the mastermind could be fixed only if he is designing those 4 transactions and is retaining the benefit of those transactions. But friends, as regards as criminal proceedings are concerned, under section 132(1), out of the 12 offences, if any of the offence has been designed and the benefit has been retained by the mastermind, he can be fixed. Criminal proceedings can be initiated against him. Another amendment in section 132 subsection 1. Friends, in section 132 subsection 1, your clause A, B, C and D are very important. Clause A, B, C and D are very important because any person who is involved in these offences for a tax evasion exceeding 5 crore rupees, the offence would be cognizable and non-bailable. Furthermore, any person who is involved in these offences for an amount exceeding, for tax evasion exceeding 2 crore rupees, arrest provision gets attracted. Now friends, what are these clause A, B, C and D? Clause number A, supplying goods or services without invoice. Clause number B, supplying invoice without supply of goods or services. Now friends, the person who is supplying invoice without actual supply of goods or services, what is the purpose? The recipient is going to take the credit based on this invoice without actually receiving the goods or services. So friends, clause number C says any person who is availing the credit based on merely receiving the invoice without actually receiving the goods or services. So clause B is for the supplier, clause C is for the recipient. Clause D, collecting an amount as tax but not depositing it to the government beyond a period of 3 months from the due date of payment. Now friends, these offences are important because these offences, if any person is involved in them for a tax evasion greater than 5 crores, this offence is going to be cognizable and non-bailable. Also, if any person is involved in these offences for an amount exceeding 2 crore rupees, for a tax evasion exceeding 2 crore rupees, arrest provisions gets attracted. Now friends, let me put a scenario before you. I supply invoices to you without actually supplying goods or services. Let's say the tax evasion is greater than 5 crores. Am I covered? I am covered. Where am I covered? I am covered under clause B. You as a recipient, I give these invoices to you. You as a recipient, you take input tax credit of it. Are you also covered? Answer is yes. You are covered under clause C. Any person who is availing ITC using the invoice or bill which is referred in clause B. Now friends, let me put a case before you. Let's say you yourself are generating invoice and taking input tax credit. You have not received the invoice from anyone. You yourself generate an invoice and take input tax credit, meaning thereby in GSTR 3B, you just punch some figure as input tax credit without having an invoice, and without actually receiving the goods or services. Without having any invoice, you generate some document. You actually did not receive any invoice from anyone. You also did not receive a fake invoice from anyone. You yourself generated some document, and let's leave generating a document. Without generating any document, you have just punched in some crore rupees in GSTR 3B and you have taken credit. Are you covered under A, B, C or D? Are you clear with the scenario? You have punched in some random figure in crores in your GSTR 3B and you have taken credit. You have not received even a fake document from anyone. Or you yourself have created some document based on which you have taken the credit. This document was not issued by anyone. Are you covered by A, B, C or D? Friends, what does A cover? Supplying goods or services without invoice. Have you done so? No. What is B? B says supplying merely invoice without actual supply of goods or services. No. When you are going to make a supply, you are going to actually supply the goods or services. Against the payment of output tax, you will be utilizing the credit which you have just taken, generating dummy invoices. So friends, as regards as you are concerned, have you supplied any goods or services without invoice? No. Have you merely supplied invoices without actually supplying goods or services? No. Point number C. Have you taken credit based on fake invoices given by some supplier? The answer is no. Because here you have taken credit without any document, or you have taken credit by generating some dummy document on your own. Point number 4. Collected any amount as tax but fails to pay to the government. The answer is no. Friends, which means that you are not covered by A, B, C and D. The government wants to cover such type of offences under cognizable and non-bailable because of input tax credit frauds which are happening. So friends, here, have you availed fraudulent input tax credit? The answer is yes. The input tax credit which you have availed, it is not genuine. It is fraudulent. See friends, there is no doubt that you have committed an offence. The only question is it an offence of A, B, C and D? So that it could be cognizable and non-bailable. It is not an offence of A, B, C, D. Yes, it is a fraudulent input tax credit which you have availed, but merely availing fraudulent input tax credit is not covered under A, B, C and D. It is rather covered under E, which reads that any person who is evading tax or who is fraudulently availing input tax credit. So friends, now the government wants to make this an offence as cognizable and non-bailable. So friends, what does the government do? The government shifts this fraudulently avails input tax credit from E to C. So friends, E now reads as evades tax or fraudulently obtains refund, and where such offence is not covered under A to D. C now reads as availing input tax credit using the invoice or bill referred to in clause B, or fraudulently avails input tax credit without any invoice or bill. So friends, now are you covered? The example which we had seen, you generate some document of your own or without any document, punch some crores of rupees in GST at 3B and take the credit. Have you availed fraudulent ITC without an invoice? The answer is yes. Are you covered under C? The answer is yes, you are covered under C. So what is the implication? The implication is, now since you are covered under A, B, C and D, if the tax evasion is for an amount exceeding 5 crore rupees, the offence is going to be cognizable and non-bailable. And friends, if the tax evasion is for an amount exceeding 2 crore rupees, arrest provisions gets attracted. So friends, let's have a quick summary of cognizable and non-bailable, and when does arrest provision comes and when does arrest provision does not come. So friends, if the offence is of 132(1) A, B, C and D, which is punishable under section 132 subsection 1 clause 1, which means that for an amount exceeding 5 crore rupees. If it is a first time offence, can arrest happen? The answer is yes, it is cognizable and non-bailable offence, which means that arrest can happen without an arrest warrant, and to get this person released, you need to go to the magistrate. 132(1) A, B, C and D, which is punishable under 132(1) 2 for an amount, which means for an amount exceeding 2 crores and up to 5 crores. In this case, if it is a first time offence, can arrest happen? The answer is yes. Now, this arrest can happen only after obtaining an arrest warrant, because it is a non-cognizable and a bailable offence. It is a non-cognizable and a bailable offence. Friends, the difference between the first one and the second one, in both the cases arrest can happen, but in the first one it is cognizable and non-bailable offence, which means arrest warrant is not required. Arrest warrant is not required, and to get the person released, you need to go to the magistrate. However, as far as the second one is concerned, yes, arrest can happen, but it is a non-cognizable and a bailable offence, which means arrest can happen only after an arrest warrant, and furthermore, to release, you need not go to the magistrate. The very same person who has arrested you can release. Other offences, we are talking about other than A, B, C and D. If it is for first time, can arrest happen? No, arrest cannot happen. Now friends, when there is no arrest which can happen, where is the question of cognizable and non-bailable? So it is not applicable. Any kind of offence, if it is happening subsequent time, can arrest happen? The answer is yes, arrest can happen. Now friends, if arrest can happen, whether it is with arrest warrant or without arrest warrant, here we go. If it is an offence of 132(1) A, B, C and D, which is punishable under 132(1) subsection 1 clause 1, which means for an amount of tax evasion exceeding 5 crores, it is cognizable plus non-bailable. In other cases, it is non-cognizable and bailable. So we have come to an end of this amendment lectures. I hope you have enjoyed them. Friends, if you have anything to complain about or anything to ask, you can mail me at the ID which is mentioned over here. I wish you all the very best for your examinations.
Subscribe to LearnCab and hit the bell icon to get notified.